Okay, everybody, it is me, Gregory Mannarino. It is Tuesday, July 12th, 2022. Let's start off with this freak show of a market. Right now, well, the 10-year yield continues to nosedive. We're at 2.93. People, consider this. A 60 basis point drop off the recent high with regard to the 10-year yield in like 2 freaking weeks. 60 basis points. Oh yeah. Oh, absolutely. This is definitely the average guy and the average girl. They're getting in here. They're buying all the debt. Oh, that's exactly what's happening. How about no? What an effort. It's an incredible effort right now by the Federal Reserve to keep rates suppressed from here until who knows when. Massively inflationary. You know that. Speaking of inflationary, tomorrow we're supposed to get this huge inflation report, and we're going to see how that affects the market. But how many of you, really, with a show of hands, put your hands up, I can see you, are going to believe it, the data? Is the number going to be completely fabricated no matter what they put out? How about, yeah, that's exactly what it's going to be in this upside down, twisted, freak show, fake propagandized market. Anyway, so that's the story. Now let's look over at the stock market. NASDAQ futures, last time I looked, were slightly in the green. Okay. You got S&P 500 futures negative. You got Dow futures negative. You got crude oil under some pressure right now. Cryptocurrencies under pressure. Gold and silver under pressure. Dollar higher. The relative strength of the dollar higher. Astonishing set of dynamics that are going on, people, right now. And look, it literally has become this. Are you ready? Are you ready for it? It's every man and every woman for him or herself in this. We are in an economic meltdown. Okay, you can't know that. We're booming. It's fantastic. Everything is great. Couldn't possibly be better. Meanwhile, we have a middle class that's being systematically erased. And the pressure is going to get even more extreme moving forward. This whole issue with liquidity in the market, you got to understand what's happening. I think you do. This is just, look, it's leading to a climax, and I've been warning about this for a very, very long time. Everything we're seeing in the market right now is pushing us in one direction. That is a move to a completely new financial system. And I know you get it. None of what you're seeing is by accident here. You have central banks around the world, none more so than this stinking organization. I'm pointing at my hat, okay? And the European Central Bank doing everything they can to continue to inflate. Meanwhile, out of the other side of their mouth, they're floating out this freak and that freak and this other freak to try to tell you how much they care about it. Oh, we really are going to do something about inflation now. They're continuing to inflate people. The scenario is very, very simple. You have to understand how it works. This is economics 101 here. We exist now in an environment where central banks around the world, none more than this one, the Federal Reserve, has flooded the world with dollars. They've been doing this since 2008 as a method to inflate. Again, what do central banks want to do? What is their number one goal? To inflate, to buy it all, period. So understanding that mechanism makes it easy to understand what I'm going to tell you. So we have a world now that is awash in all of these extra bills that a dying economy doesn't really need. However, the issue is, again, the debt-based economic model. And you know this, I beat it to death, that demands that more debt be borrowed into existence in greater and greater amounts. They're going to use every imaginable avenue to allow this to happen. They're never going to allow COVID to die. They're going to continue to put out more variants of this disease process. They're going to continue to expand wars. They're going to come out with another crisis. That's just the way it is. But the situation is again, economics 101. When you have all of these extra bills floating around here, they start chasing the same amount of goods, and that's what we're seeing here. And this is, again, by design. Henceforth, why you got central banks continuing to inflate, okay? And the Fed with their faking of the market, the repo scam, passing debt back and forth to the tune of trillions of dollars every single night, the illusion of liquidity. We're definitely marching faster towards a liquidity crisis here. And that's going to be the game changer of them all, understand? And that's really the issue of the last meltdown that most people have no idea about. The reason why the Federal Reserve started pumping huge amounts of capital into the market, capital injections, was to free up the credit markets. Okay, they were drying up. And that process has never stopped, nor can it stop, because the moment we stop, this is it. It's over. This entire thing just changes real fast. So what do you want to do about it? Again, despite what we've seen happen to commodity prices lately, they've been under pressure here. Okay. These are real things, especially, and you know my take on this, people, physical silver, my favorite asset of all time. You got to be on the opposite side of the trade, betting against the debt, becoming your own central bank, period. I can't imagine another thing here. But for now, you have to realize that what you're seeing with regard to the price action in this market, nothing, not one asset today, nothing has a real price discovery mechanism behind it. I've been explaining this for many years. When you have central banks that are in here rigging the market to the highest order, and they don't buy stocks, they don't, because they tell you, this is not real. There's nothing here that is real. We have an economy that is an illusion, okay? Even though, again, we're in free fall. You know that. Everybody knows it. I mean, poll after poll after poll, people are like, our economy's going the wrong way. Things are not doing very well. We have runaway inflation. People are suffering. People are hurting. The savings rate is negative. They continue to borrow beyond their eyeballs. It just doesn't stop. I think you're all well aware of the situation here. And it's sincerely meant to keep people under pressure. And that pressure is going to get bigger, harder, and more difficult to deal with, okay, by design. So the story is what it is. Let's just recap. We have a market now, 10-year yield continuing to nosedive. How low will it go? How low will it go? How low will it go? Well, I guess that depends on, the action of central banks here, what they're going to continue to do, keep rates suppressed. Oh, but they're really concerned about inflation. They want to make sure rates are moving higher because that's the right thing to do. Anyway, we have this big inflation report tomorrow, which we will cover right here. Stock futures mixed, like I said, almost a pan sell-off situation, except for the NASDAQ futures, which are higher. But we're going to see how that plays out. We got to keep our eyes on these things, and we're going to. But the main thing is, look, all this is well and good. Sitting back here, putting the whole picture together, understanding what the dynamics are that we need to watch. But what are you going to do about it is the real question. And I say this, and I've been telling you this since time immemorial, let them play their games with regard to precious metal prices and commodity prices. We will continue to play our game because the debt hyper bubble, no matter what they do to try to keep it inflated and continuing to inflate it, at one point, we're going to hit that moment of maximum saturation that I've discussed here. And this entire thing is going to get very, very real. That's my take on it, people. Cash is just going to move from risk on assets to risk off, and it's going to be very, very rapid. So, again, I can't see a better place to be in right now than in real things. More specifically, physical silver, my favorite asset of all time. It has never changed, and it never will. I think if you just look at a few dynamics, which I've spoken about many times, little homework assignment, okay, very, very simple. I want you to just, go to whatever search engine you like, look up the Dow gold ratio, gold silver ratio, and you will see why, again, I believe with all I got that silver, physical silver, remains the most undervalued asset on the planet. All right, that's it, people. I'm going to let you go. Please share the video. Please comment. Get it out there. I'll read the comments, I promise. And I will see all of you at the end of the day. I'm looking forward to it. That's all.